want to say, first of all, thank you so very much, Mr. Nita, for allowing me to come. Mr. Pradipji, thank you so much for putting this whole thing together. And for all of you, I've learned so much about Illinois real estate. I love your socks, by the way.
Thank you.
A CEO with style. I appreciate that. So, my name is James. As you heard, I'm going to be very brief. If it's 20 minutes, that's 10 minutes too long. And my intention is to talk to you about what we do with real estate professionals / real estate investors. I used to work in pharmaceuticals for Abbott, and I retired out of that over 20 years ago to work for myself. But over the last 12 to 15 years, I've been working very, very heavily in the real estate space because I work with a lot of investors back home in Maryland. It's spread, and here we are. So here's how it works out, right? So if you look at the people that we're involved with, everyone in here is somehow connected to those categories. What we have is a continuous income program. So if you think about it, when I move to close on a property or I'm investing with a property, there are certain services that I'm going to use no matter what. They're going to authorize ComEd, Nicor, People's Gas, North Shore. They're going to turn on AT&T, something along those lines. We have a platform with a company called Salesforce. And our platform with Salesforce allows for us to offer these services, to create a concierge service. So with that concierge service, you're able to create a continuous income after closing. Let me give you an example. One is a company called Vivint. Vivint is the #1 smart home security service in the United States. #1 rated, #1 ranked. When I bought my home, I got a phone call from ADT. Matter of fact, I got a phone call a lot from ADT because the new home sales office had a partnership. If I would have gone with ADT, they would have received a $200 commission, something along those lines. I'll be honest, that's not going to change your life. Here's what can change your life. The agreement we have with Vivint is that for every account, you will earn a residual continuous monthly income for the lifetime of the account. Now that's very, very different. So to give you an example of how that all works out, and an agent is assigned to you, or depending on the scale of your business, Vivint assigns many agents to you. So you're able to say something if you're a real estate professional. Our relationship does not end at the closing table. We have a partnership to help our clients ease easily to their new home. How it works out is that agent calls to that new client, they set up the enrollment. Salesforce creates a unique ID number for you, and you have a back office that's created, and you'll see within 24 hours, you'll be able to track all of the accounts, what the residuals are. It's all broken down for you. Our second partnership is a company called Zoom Energy. Zoom Energy is the highest rated energy retailer in the United States. Zoom Energy has the largest footprint. We operate in 19 states and 2 provinces in Canada. So what does that mean? You're able to generate an income off of ComEd and Nicor. And since I landed here, I think Nicor is making a lot of money right now because it's really cold. And so here's how this works out. They get an account number from these companies just like they always do, but as they pay their bill to ComEd, as they pay their bill to Nicor or Peoples or North Shore, you're going to earn a residual income for the lifetime of the account. The question is, how long do you think someone's going to pay ComEd for? This is why she's excited. So here's how this works out. There's something called a PJM. Is everyone familiar with that PJM?
No.
Okay. So basically, power is bought and sold to you. And with everything that you were talking about with inflation and the economy, the cost of buying power went up 833%. Okay? Now, it only affects these states, one of them being Illinois. So, what does that mean? That means that the cost that it affects me too. I live in Maryland. So, the cost of what you normally are going to pay, if it costs ComEd more to buy it, it's going to cost you more when they sell it to you. So I was looking some stuff up here earlier, and I discovered that, if I'm not mistaken, see here, your state, as of December, has approved a $606 million rate increase with ComEd. So, I know that's good news since we're talking about, okay, you don't look happy, no problem. As long as your lights stay on, that's the most important point. However, with Zoom, you're able to get a fixed rate. So, this is going to start in June of this year. Here's why this is important. You were talking before about interest rates and locking in at 4% or versus 7 and all those other things. Knowing that everyone's rate is going to go up starting in June, do you think it'd probably be a good idea to lock in prior to June? This is why I made this flight. Here's how this also works out. With the services, all these services that are inside of the menu is all housed on one platform. When they get these services, so for instance, I work the real estate, a very successful investor in the DC area. Every single property that he has right now, he has around 1,500 units. Every single one of his units, the essential services, comes through himself. So not only is he the landlord, he's also the utility company, he's also the internet company. He's creating multiple streams of revenue rather than just the cash flow only on the property. Everything like that functions with us, so you're able to create greater value if you're a real estate professional. You're able to say to your clients, I have a concierge service. I'll help you set up your accounts, where you're not the one actually doing it. There's a team of people that are doing it, but you're able to create continuous income after closing. That is a very big deal. The other part of it is there's other incentive bonuses that are on the table, but the more important thing for me is residual income. You'll get paid up to 7% monthly for the lifetime of these services. I've been here for 28 years. I am generating revenue on things I did 25 years ago. That's why I look so young. This is a very, very, very big deal. Because these are services, I want to make clear. Everyone is going to get these services, whether any of us participate or not. They're going to call ComEd. They're going to call Nicor. Whether you choose to generate revenue, it's your choice, but they're going to call these companies anyway because there are no other options. And so to launch the site with Salesforce, it's $299 and $25 a month. So it's a one-time fee and $25 a month to run it. So I run my business. They do all the heavy lifting. They do the account payable, receivable, tracking, reporting. I just log into a website twice a day when it updates, and it shows you all of your stats, all of the accounts, what the usage is. All that is broken down for you. So you're able to create a concierge experience, as well as you're able to earn a very significant residual income long term. But on top of that, you're building a database. So I work with a realtor that works with a company called Compass. And every single closing that they've done over the last 5 years, they've given them Vivid for home security. Well, it shows you when the installation dates were. So they have a rule every 90 days. When they log in, they could see this person enrolled for Vivid January of 2025. They reach out in, let's say, April of 2025. But they're able to do that because they pull a very simple report that shows all their services. Now, has any of you been to like the Champaign, Urbana, Springfield? Great. All right. Just wanted to make sure. So, there is an organization. They're going to pull this up out here. There's an organization out. Well, it's an investment group. This is kind of a great example of how this all works out. Has anyone ever, if you've been out there, have you ever heard of a group called Green Street Realty? Green Street? No? Okay, well, they're really big, right? So Green Street is an investment group. So the way it works out is this. They have, right now, they have apartment buildings, restaurants, condos, everything. They have around 4,100 units throughout that area, the college community. Yeah. Chris has done very, very well for himself. So he's one of the people that we work with. So when I met with him, he said, so let me get this straight. You're telling me out there they have a company called Amarin, which is like ComEd here. So he said, you're telling me that I can be paid on Amarin? I said, yes. So here's what it looks like. Really simple. This is, see, you won't be able to see it clearly, but see where it says Zoom Energy? All of the apartment buildings, there are 11 apartment buildings that have been enrolled, not including all the single families as well as the restaurants. So every one of these things that you're looking at is a unit, right? So it says here, Green Street Realty, apartment, blah, blah, blah. Here's the account number of the utility company, that whole thing, right? So all of these services, all of these accounts, they're enrolled under themselves. So they are now getting paid on over 4,000 accounts that they were going to have to pay anyway, and their tenants were going to have to pay anyway. What does that mean? When you have an apartment building and you include something like utilities, what they've done is they've included utilities and they're charging a convenience fee. Because now we're paying for the utilities, they're charging a $50 convenience fee. Well, they're saying utilities included. Okay? The $50 utility fee is income. The income influences the NOI on the property. What I just said, is there anyone here that's a multi-unit investor? 5 or more units?
No.
Raise it if that's the case? Okay.
We all are.
Okay, good. Okay, so what I just said is a very, very, very big deal. Because when they've gone to go and refinance on the properties, they're able to show more income. So to give you an example, very, very simple, they took a 35 unit building. And look, you all know the numbers of your cap rates out here. I don't know what it is out here in this area, but you know your cap rates, what they look like. If you have a 35 or 40 or 50 unit building and you attach an additional $50 per month to each unit, when you go to refinance on that property, it's a very different conversation. Without doing any major rehab, without doing any major upgrades, all they did was they became the utility company. I'm done. That was 10 minutes. All right, so Miss Stacy has all of the information. For some of you that are in here, I don't know if you're able to pull it up or not, but there's a QR code there. If you're able to use that QR code, it will hyperlink you to a Calendly where Miss Stacy has a calendar system put together. I'd be more than happy to schedule private appointments to hop on and explain how this will work for all of you, but I will tell you, you will never see cold weather the same when it's creating revenue. If that makes you feel like that.
James, you want to share about the impact sharing?
Yes, absolutely.
Just 2 minutes.
Oh, because Mr. D is a brand new member. That's right.
Yes,
Okay.
I'm a brand member.
Yeah. So one of the services that we created, and this was really for personal usage, but it ended up becoming way beyond that, was called Impact. So I'm just out of curiosity, is there anyone in here right now that currently you pay for your own health insurance out of pocket yourself? You're not on a spouse's plan or that kind of thing. Is anyone who's paid for themselves? Okay, one person. Anybody else? Yourself? Okay, got it. Anybody else that pays just for regular health insurance? Okay, got it. Just out of curiosity, who do you have right now? He got someone. Okay, got it. So he's like, I know I'm covered. Say again?
My wife pays for me.
Where's your wife? Where's your wife? You're a lucky man. Okay, very good. Very good. So, okay, got it. So with Obamacare, it's not based on your health, it's based on your income. So because I work for myself, I was paying for myself and my family around $2,300 a month for my health insurance, which at the time was a deal. I was really happy at that time because the other quotes were almost $3,000, right? But Impact is a not-for-profit. So Impact has no for-profit motive whatsoever. As a not-for-profit, I went from paying $2,300 a month for my health care to $513 a month for a family of 5, and I have a no-network commercial plan. So just so you know, Congress people and senators don't have lists of doctors they can go to. They kind of go wherever they want to go, okay? It's called commercial. So there's 4 levels of healthcare. Medicaid, state care, HMO care, PPO care, and then commercial plans. Commercial plans are called CEO plans. Some of them run $20,000 to $25,000 a month, which the average person is not going to pay. But if you're the CEO of Google, what do you really? It does not matter. Impact falls under the category of commercial. So I have no open enrollment period. I have a concierge department that schedules all my appointments for me. I have no network. I can go to any hospital system in the United States. I have no contracts. They have a wellness credit program, vision, dental, all of these things. The most powerful part is the savings is really incredible, but also the ability to have options to go wherever I want to go. So, for personal usage, Miss Anita is a member of Impact now. It's more of a personal usage, but here's what we have found. We found a lot of real estate professionals either have no health insurance, terrible health insurance, it's like these $150,000 deductible plans or something to save money, or they're on a spouse's plan and they pray their spouse never leaves the job. This is how it works out. We have people right now they work with that are agency owners and broker owners, and they're letting their clients, their team know that they have an option for healthcare. They're all independent, but that's a benefit to be able to say they have an alternative to the high price of healthcare. But one other point I'll make, because this has worked very effectively for a lot of broker owners, is the ability to tell their team members as they're, because they might be looking at you, they might be looking at Main Street, they might be looking at some other company. When you're able to say, when you join our organization, we have a program to be able to create a continuous income for you residually, day one, you become a lot more attractive than the person who's talking about just like the 90-10 split.
Yeah.
It's a big deal. When a real estate professional hears the ability to create a continuous income on work they did 5, 6, 7 years ago, your brokerage and your team becomes a lot more attractive than the other one down the street.
And it's a ACA compliant and
it's ACA compliant, I think, yeah, for sure, absolutely. So does that help everyone?
yeah, it's a great information.
No, my pleasure. I don't know if anyone has any questions or anything before I go and read it. Yes, sir, what's your name?
Age restriction for the impact?
Age restriction, you have to be at least, well, no, if you have a guardian plan, if you have little kids, and you want them to have their own plan, but when you get to 65 or older, by law, you have to get Medicare, and then it functions as a supplement, but there's no age restriction outside of that.
And then if you sign up for health programs, like if you are into a yoga class or a fitness
Yes.
class, yeah.
Yes, so great question. So we have something called the Whole Wellness Credit Program. So let's say you have a deductible of $2,500. Anything that you think that keeps you well, yoga, Reiki, hot stone therapy, cold stone therapy, massage, I like a little reflexology once a month, whatever it is that acupuncture, whatever you think keeps you well. If you go to Whole Foods and you buy supplements or vitamins, they will credit your account $150 a month to lower your deductible because you think it keeps you well. Your gym membership, your Peloton membership, they don't put any restrictions on what it is you use it for. It's just anything that you think that keeps you well.
And what about the deductible? Is it for the family or is it a member?
Yes, absolutely. So, Mr. You were asking you're getting the gold star of the day.
I had these questions myself. I had these questions myself, and I want people to benefit from it.
Yeah, no. So I'll give you an example. My birthday is 5/17/1976. There are 5 members of my family that are on Impact. Myself, my wife, our 3 kids. Right? So when I hit get quote, that number. Can't see it? Oh, wait a minute, hold on a second. See here. Let me hit escape. So why is that doing that? Let me see. I see why. All right. Now let's do this. Okay. So before I was paying Blue Cross, United, Aetna, Cigna, I did them all the nuts. So I had a plan. my last plan was Blue Cross Blue Shield. I was $2,300 a month at a $7,000 deductible. My wife had a $7,000 deductible. Each one of our children had a $7,000 deductible. Okay? I now have, this is my plan with Impact. I have a $7,500 deductible. That's for the entire family. That's all of us combined into one pool. I pay $513 a month for my plan, and anything that I do gets repriced through what's called reference repricing, which means they have a staff of attorneys that call the hospitals to renegotiate the bills before I ever see them on my behalf. It's really good. I'm a big fan, if you can't tell.
You could see any doctor under this.
Any doctor. There's no network. You just go wherever you want to go. And they'll call ahead for you before you go.
And your doctor can give the care that he wants to give, not that the insurance company wants
Yes.
to give.
Yeah,
I've lived through that, so
Yeah.
I'm a big component of that.
The world, because of all the events that have taken place in healthcare, I think a lot of people are more aware today of insurance companies and how they function. I'm not going to go into that conversation. I'm just going to say this, that a not-for-profit has to spend the money, and an insurance company does not want to spend the money. And when it comes to your care, that's slightly a problem. Because if you actually want to have them give you the best option, they will typically do what makes the most fiscal sense. Fiscal sense in your health, that's a little bit of a conflict. So Impact, they have to spend the money every year. And it's been unbelievable for my family. Unbelievable.
Cheers.
So what I'll do is I'm going to leave this. That QR code is on the screen. If you didn't get it, I'll just leave that there for you all. I believe Miss Stacey's already has folders or something.
Yeah.
So I'll hang around for a little bit as well. And I appreciate you taking the time.